Let's look now at a really interesting form of investing called futures, or trading on the futures market. Now, as it suggests, it's all about future outcomes, prices and products. What will they be worth in the future? So what can we trade on the futures market? Well, this is just some of them. For example, coffee, wheat, wool, beef, which is popular in Australia, a couple of commodities down here with gold and silver. All of these products can be traded for a future price, and that's what the futures market is all about. Now, when you're in the market trading futures, you have one of two purposes. You're either speculating or you're hedging. So you're speculating on what you might be able to get, for example, for gold 6 months or a year from now. Or you're hedging, which is hedging your bets, meaning playing it a little bit safe if you're selling something maybe. Now let's look at speculating first. You're always trading for a profit, and you can do that in one of two ways. Firstly, you can speculate on a price rise, and that might be gold, for example. You're speculating it will go up. If it does, you've made profit. Or you're speculating on a price fall, and let's say wheat, for example. If it does go down, you've speculated correctly, and that's how you make your profit. Now on the other side of the coin, you've got hedging, and you've probably heard of the term hedging your bets, which is playing it a little bit safe, dollar each way, making sure you're not left with nothing. Now we're going to look at hedging with an example of a wheat farmer exporting to the US. Now he's got a harvest that's due 6 months down the track, as it suggests the future or the futures market, which is where wheat is at. Now what he's going to do is suspect that he might get $400 a ton for this wheat in the future. But will he? Well, who knows? He expects that's going to equate to $1 million harvest. But that produces a big question mark. Will he get it? What could happen between now and the future? That's 6 months of waiting for the crop. Now, he could have a bad crop. There might be a flood. There might be currency conversion. He might be outdone by overseas competitors. All sorts of things are going to happen. So what he's going to have to do is hedge his crop, meaning he's going to lock in a set price right now before the harvest happens, before it's due and he's got his product. Now, there's the big question mark on the hedging. What do I do? What do I take? How do I go? Which way? Well, he thinks it's going to be an expected $1 million harvest, or is he going to guarantee himself $950,000? Take a small drop, a little cut, just pull it back a little bit, but guarantee himself the income. So you can look at it similar to a form of income protection or income insurance for a salary and wage earner in a work office environment. If something happens, there's a little hiccup, an accident, you've still got a way of getting paid should something go wrong. That's what the futures market is all about, future outcomes, and those are just some of the individual items and products that you can trade on the futures market. But it must be perceived as a high risk investment. Anytime you're dealing with the future outcome of something, there is a huge unknown. Now with high risk investments, what you need to do is put a risk management strategy in place. You're dealing with your capital. That could be your super, it could be your life savings, that is gold. The preservation of your capital is so important. It is the number one most important thing if you're a trader or an investor. You've worked a long time and you've worked hard for that money. You don't want to throw it away through mistakes. So part of risk management is getting advice or having a broker or a fund manager, people who can analyze what's going to happen, people who've had experience in this market. Have a look at our risk management video and see if the futures market is for you and get a better understanding. If it is, happy trading on the futures market. As for now, thanks for watching.